Well, no matter what you think of Elon Musk, you've got to hand it to him when it comes to earnings calls. He's the master of the pump, and he gave Wall Street everything they could want and more. Cheaper cars, AI software, and of course, an entire new ecosystem, sending the stock up 11% in after-hours trade on the promise of a future, while the reality looks pretty bad. So is it something that actually is changing the game on this stock? And more importantly, could it begin a new rally in these markets? Well, there's one thing that's coming soon that's going to change everything. Not only is dark pool activity starting to rise around this level, the VIX is getting crushed down to an important point, and of course, Meta kicks off really what is the most important of the mag stocks. So, with percentage of breadth starting to improve across the board, is that all we're going to get in this correction so far? Let's discuss stocks, commodities, and cryptos right now to better understand these markets together. Well, welcome back everyone to The Daily Show. My name's Tom, and as always, we're covering the macro, the data, the lead indicators, and the hottest charts together. If it's your first time here, welcome. Make sure to subscribe if you want to find out more about markets and why they move. And of course, hit that bell icon. We do this every day, but let's get into it straight away because there's a lot to cover. And it starts off with actually a story about us, the retail traders. It looks like everyone got a little bit freaked out last week with that semiconductor fall off. And why not? Semiconductors like Nvidia fell over 10% in one session. Almost unprecedented when you think about it. But overall, that led to less participation this week and a steep drop-off, according to Goldman Sachs, down to 28% of the overall market volume. When we go over to the S&P 500, you can probably start to see why. We just got a cluster of small trader put buying and large trader put buying all happening at the same time. And because we hit the 20-week moving average, this is an area where sometimes market corrections can pick up. If we go back to one of the strongest bull runs we've ever seen back in 2020, 2021, we never got any worse than the 20-weekly moving average throughout that particular period. So is this all we're going to get? Well, one thing we'll be looking for as well is a series of these overall put buys. So we'll be covering that story moving forward as well on this channel. Let's jump over to some of the reasons why we're rallying though. One of them has to do with just the overall sell was so aggressive. Percentage of stocks above the 10 and 20 moving average ended up dropping all the way down into the 10% category. We also saw the 50-day moving average drop down below 30. And this is usually the first kind of buy the dip zone or rally area. And we've already talked about how the 20 moving average was probably going to see some buyers. But as we find ourselves coming into Meta, arguably the most important of the earnings season so far because it's a mag stock that's really doing well right now. If it doesn't present well, yeah, the stock's not going to like it. And I think we're going to move from a potential negative gamma to positive gamma situation if they actually do represent some good figures. So why do we need to be thinking about everything in the markets right now? Well, breakouts should also be confirmed by certain things. And one of those is going to be this particular chart here, US corporate high yield average OAS. This is something that we've seen happen every single time we've got breakouts to new highs. Let's just say this was the end of the correction and we rallied to a new high. While that happens, we really want to be seeing a breakdown in this chart, showing us that risk has come off the table. Now you'll notice that recently it alerted us to risk coming back on, and it's done that a few times over the last couple of years, certainly starting to alert us to something being wrong in the markets back late August, September, and October, and again in the beginning of January of this year. Basically the main pullbacks we've seen. But should we be too concerned about these pullbacks, about these corrections? Well, we've got some great stats later on what we think might happen in the future, but this one here kind of presents, I think, a pretty bullish case. The US corporate BAA spread versus the US 10-year Treasury note remains underneath 2. And traditionally, this has been a pretty good read of a market that is fairly decent. And unless we're above 2.5, we're not really heavily bearish. We shouldn't be really terrified in the markets at this stage. So will we ever get a 2.5 again? Absolutely. Will we be watching? Absolutely. But for now, it's right down near the bottom, which shows you that whatever this sell-off is so far is most likely just a correction and a healthy market pullback in the levels. So a question I asked everybody over on X was, what is the best performing index in the US over the last 6 months? Well, as it turns out, the answer is actually the Russell 2K, just taking over the S&P and the NASDAQ over the 6-month period. And yeah, I know that's pretty surprising. I didn't actually think it would be that high. But one of the things that we've seen going on is the percentage of the overall broader market has been improving in recent months, mostly led by the mid caps. And of course, the S&P 400, 500, and 600 have all still stayed well above their 200-day moving average in this current sell-off so far. I mean, there's nothing else that you would ever see because, of course, it was such an aggressive sell-off. They're never going to get below their 200 that quickly. What about the market factors of the last session, though? Well, again, green above the board, and small caps and mid caps were actually outperforming the biggest tech stocks and the biggest cores. Big growth, of course, was doing well, which is your Nvidias and your semis and stuff. But in general, I would say that this is a very telling sign that there is a hidden undercurrent of good stuff happening underneath the market while the market sells off. And this means that breadth thrusts could continue in these markets moving forward, even if we correct further, getting a negative 10%, which at the moment is our kind of worst case scenario that we're seeing on these charts as a possibility. The general thought process is that when you come back even a month later, the chance of things like the Russell being up based on the current reads is actually at 72%. Now, that's above general market bullishness. So again, a lot of the stats are still pointing towards this bull action inside of these markets. Another one that we're going to have to look at is the swag breadth thrust. Now, we talked about this over the last 24 hours. It's not active yet, but you cannot ignore the stats of this particular setup. They're very, very bullish across the board. And of course, if we do continue into a positive gamma situation once again, you'll have to have not really much bearish bias for a little while as we look towards buying the dip and those types of situations. It hasn't happened yet though, but if it does, you'll see the stats are here. It also tends not to happen at this many times. We already showed this particular stat, which was from last year, where we got that really strong double Zweig thrust. This would be a triple. Now, I don't even know if we have a triple ever in recorded history, and I'll try to find that out for you guys. Maybe you know in the comments down below. But yeah, a pretty bullish read if we do end up getting one. I guess we probably won't, but we'll find out. So with this Tesla ecosystem, was Elon Musk successful? Well, he's made the promise, and the promises are fierce. They're everywhere. We've got ride-hail software, humanoid robots, NVIDIA calls that are going to be something like, I think, 85,000 H100 GPUs by the end of the year. And of course, the cheaper car promise, although not being that cheap. On the surface of it, the earnings and natural report itself was pretty bad. But you've got to remember the stock is also down 40% this year. So it doesn't surprise me at all to see everyone being so negative into the earnings. The market obviously set that way up. And actually throughout the trading session, it was telling you that it maybe wanted to go bullish, opening above the previous day, holding it, and then after hours, I kind of suspected one thing, which was that Elon would come out with the big AI world as much as possible and move Tesla into an AI company. That's what really is happening here underneath the hood. To get these valuations up, what do? You just mention AI a million times and then turn the company into it. Now, this could be a good thing. I have always found, and I posted this over on X, that when it comes to Tesla, when it comes to their back against the wall, often they pull the rabbit out of the hat. That's what happened with the debt situation years ago. That's what's happened every time it's faced a lot of scrutiny. But will it be the same again, laying off 11,000 jobs? Maybe that's cutting the fat. We'll see how Elon gets into it. But hopefully he starts paying more attention to Tesla and less tweeting or whatever's going on. Core risk models the other day did show that we had an oversold market. Again, it just shows you the speed at which this market came down. And it's more to do with, being able to see kind of that a little dip or a dead cat bounce was to be expected. So where do we find ourselves? Well, let's have a look at the charts. We'll start off here with the S&P 500. Now, we've got a 50-day moving average here on the charts, which is this red line here. And you'll notice that it's come up to this level, which just so happens to also be a 38.2 fib of the high to the low. Now, in most case scenarios, this is where you would expect the bears to try to recommit. And it's clear the options market is kind of thinking the same thing. Huge amounts of calls above 5,100 and huge amounts of puts at 50.25 have the market sliced between two different zones. And this is what tends to happen into a massive earnings announcement. If you think about it here, we have this zone in terms of futures. We posted this over the last 24 hours, and it shows us that the supply sits around this area. We also see here that we've got a VWAP and also call positive gamma at the 5,100, and the put level remains at 50.25. So if Meta comes out and the market continues to, like, let's say, crash off or fall down, when that occurs, I would probably say the bears are starting to get in control underneath this level, pushing the negative gamma and therefore hedging environment. But if it ends up being bullish and the markets do get above 5,100, I would think we've got more to go on this market and possibly an all-time high. The next zone I would watch after that would be a 61.8 fib of the whole retracement. But other than that point being a pretty heavily traded area, which I know is up there, which we have around this area here, I would say that, things are looking a lot more bullish at that point. So let's have a look at these options. First up, you'll notice that over the next 24 hours anyway, there's a totally different 0 DTE looking overall spread compared to where we've used to be over the last couple of weeks. We've really been in a massive negative gamma environment, but that could change. We could go positive gamma over the next 24 hours based on how many calls sit around 5,100, 5,110, and if the markets push through that, the hedging would therefore be towards the upside, buying futures, and it would start to push us higher and higher and higher. So things are really changing underneath the hood when we take a look at it from that perspective. What about CTAs? What about dark pool activity? Well, we'll start here with CTAs, and CTAs kind of had a small uptick on the S&P, a small uptick on the NASDAQ, overall still pretty much sellers, and gold, which I said I'd update, they did end up selling. Now, they're heavily long on gold, so it makes sense to get a little bit of a pick back here in CTAs. That's usually what happens. We want to see a little bit of a dip here, a little bit of a breather for gold, though the day trading might be still on the bullish side. So we'll look at that and talk about the charts very, very soon. Into this earnings season, people are going to be talking a lot about oil, inflation comebacks. Well, again, according to Goldman Sachs, the rise in current oil price doesn't really mean that we're going to have a huge upside in core inflation. Now, because oil is also moderated in recent days, I think that, they're probably right about this. And if Brent rises to $100 a barrel, here are some of their projections in terms of what they think's going on. From a breadth perspective, everything is improving. And I think the big thing here is when we look at percentage of stocks at 10-day highs, it's still in the sectors that most retail traders don't trade: consumer defensives, financials, and real estate. Utilities as well. So this is all the defensive type of positions, although financials are not traditionally defensive. And them breaking out, especially KRE coming back in force, is telling us that, again, this correction right now, whatever's going on, may be under, and it's still very, very bullish, because financials don't tend to be strong when everything else is really, really weak, especially being the economy. It does suggest that lending is starting to expand and that easy money flow is starting to come into the system. And that doesn't mean low interest rates. It just basically means lax lending. And we all know where that ends, but for now, it could be starting to appear. Small caps, mid caps, and large caps, again, we've already talked about the small caps doing better. 25.6 were below their overall 3-month lows just the other day. That's now only at 17%. So underneath the hood, even though it's only been a little bit of a pickup so far, again, it's improving. New highs to new lows. You'll notice here we have 510 new highs to 60 new lows. So again, a big change in the S&P 1500. And when we think about correction periods for what we expect during a presidential election year, we really see around a negative 9.93% being the median. So to get that, we would need to dead cap rally bounce here, drop down, if this is to be the one that may statistically happen, and then we would drop down to the 50-week moving average, which would be that big zone, the 9.93 kind of 10% correction sell-off. Now, will we get it? It really comes down to Meta earnings, Google and Microsoft, and we've said it all week. And this is what election years often do look like. At the time of this recording, it kind of looks a little bit more like this. So if I drew it in, it would look like this. And that's actually what you expect, a little bounce here. Now is the time whether it follows the real systems of what tends to happen. The dead cat bounce, the fake kind of bounce, and therefore bad earnings from Meta, or at least less impressive kind of earnings, pushing the markets down to be bought back into in May and June, or are we just going to start continuing to bull up? Two main levels, right where we are, 61.8, and then pretty much the bulls are in full control. SPX overlay up suggests the same thing when you look at correlations. Again, most of the markets all kind of decline around this point and then they start to improve. So if you're going to go with the seasonals and what happened in the past, then you would say that, it's probably going to still be sideways and there's going to be opportunities. I would say that as an investor, these are still very minimal pullbacks. So really in these situations, most people would want to still be overall long in the markets, at least from the statistics standpoint. You, of course, need to make your own decisions. So with Tesla out of the way, what's next? Meta after the close, and we know this is going to be a massive move. The options market got it smack bang right. They thought it was going to be plus minus 10 on Tesla, and it ended up being plus 11 after Elon gave it the juice. And Meta is expected to be massive as well. Even a larger company at a plus minus 9. I'm telling you, Vol is still out there, guys. And if they don't present what the market wants, could get nasty pretty quickly. When Wayne went through and had a look at how this market is trading this year, he actually found that for some reason we were trading very similarly to 1985 and 86. And I find that incredibly interesting because it's actually where I kind of feel like we are in the cycle. Now, if you notice, there's 1 month there that looks wild, and that's January of effectively what would be 2025. Wow. Imagine if we did that 13.2% in January of 2025 would be absolutely insane. The May stat, though, is actually incredibly bullish, followed by a dipping in July, a dipping outside of course, the election, the overall December-November kind of election period being a little nasty, but then coming through with some serious strength. So I guess the story is exceptional gains if we do end up following that particular path. Plus 22.4% over the next 12 months could be there. When we go over to Tesla, you'll notice that there are some big trades. And I thought we'd bring this up because for Tesla to really strengthen off here, it's going to need to get past these points. Now, we already know that 23 and 77, these kind of big circles, were most likely still sells in the markets, or they could have been positions towards the buy, which need to be regained. For this market to really hold up, Tesla needs to close above those zones, which is going to press a 160, 165 kind of level, and we'll be looking also throughout this as it is a supply to make sure that the action is still looking pretty good. And then we have the big one here, which is the S&P 500 with a dark pool sweep after hours. Now, this is a pretty big one because it's a dark pool transaction that just so happens exactly where we saw two large ones before that we have to assume were sells. Now, if that's true, and we know this is supply, could that be somebody getting ready for a bad Meta earnings? I would say they'd probably hedge it off regardless, no matter what happens, but it does kind of look like a potential sell. But if the market does break through, then you'll know these were buys. And yeah, again, I think it's kind of suggesting that the markets are looking a little bit stronger than we'd think. What over here happened? Well, over the last 24 hours, we had some of the main things that you want to see strengthening, particularly construction, ITB. We also saw semiconductors, clean energy out of nowhere, and gold coming up. But really, it was the usual subsects that come first. XLK, XLC, semis, and to see construction up there is, again, a healthy sign for the markets. They're going wild right now, those construction companies. Let's go over to the VIX. So VIX is still within our area of 16 to 15. We've already demonstrated in previous big kind of areas, such as what we saw in August of 23. We want to be holding above VIX 15 whenever possible. And 15 to 16 is where we need the VIX to hold above. Now, it's getting crushed, which is not unusual when you come off a weekly 20 moving average. But if it does break underneath this zone, it may be all that you get as a bear. So yeah, be very, very careful here with the VIX. Make sure to watch that one. The VIX is there. We also know that when we take a look at overall options and, of course, the bonds, we know that the overall risk is lessened over the last 24 hours with a big drop-off. Again, signaling that maybe the sell-off's over, maybe things are starting to improve again in the markets. We'll have to find out with the next level of price action whether we go into the positive gamma situation. And when it comes to central bank support, yeah, they both dropped off. They're still holding at those lows. No noticeable change here as of this particular recording. We'll update if that does change. US 2-year now. Let's have a look at US 2-year. Not above 5%, so no real worries there. US 2-year still kind of like consolidating, and we're still looking really more for the sign of not so much yields, but an inversion of the yield curve. That's going to be one of the important factors moving forward. Dow Jones Transportation also at a critical resistance. You'll notice here, support becomes resistance. Two moving averages, both the 200 and the 20, sit on top of each other, a ribboning effect. It's a critical zone and very, very important for Dow Jones to retake that. This is exactly where the bears would come back in on that market. US dollar now drops off a little bit, still in consolidation. Remember, you can't really be super bullish US dollar until it gets through 107 and takes that new high. At that point, I think it's a squeeze on the dollar. Though I would have to say that if I was looking at what I think the US dollar is going to do over the next 12 months, I would say that I believe it's going to be a sell. And we'll explain that coming up in a video very, very soon, because I do think the US dollar will weaken against most currencies in the world, which is going to be good for some of the metals, in particular copper, gold, some of those. Copper already doing well against the US. That's wild considering the US dollar strength. So it just shows you there is an undercurrent of very large strength throughout a lot of these metals. And we've been talking about them for a while. I do believe that we're still in a pretty decent bull run for these, with pullbacks going to be met by bull demand in general. Now let's go over to gold, because we did see that large transaction in gold stocks. And from a day trade perspective, we actually took a little bit of a long. So in the last session, if you went long during the start of the session, I wouldn't have blamed you for the rest of the day. It would have been a very nice little trade. Basically, you'd be longing around this area here, especially after you see that wick rejection getting closed and getting moved above. And then it came into the supply over here. Now, I think that if you pulled maybe down to around this level, 23.05, 23.10, that zone there, I'd be liking to see some strength coming back into the market. But gold will be a very important one for us to be watching. So I think I'll have that on the charts for now. And if it does take that zone, then it could go back down to the 61.8 fib. Another one is US oil. Now, we've got two zones, the good bull zone and the great bull zone. I like the great bull zone very much. Here, I'm still confused about what oil really wants to do. It's kind of put in what you would think is a double bottom from a technical standpoint, where again, it's supply, kind of similar to gold. If the bears are retaking oil, they're going to take it here. So I think the bears are in control of this market still until this level is maybe taken out, which is about 83.75. And around here is where I'd be looking on the smaller timeframes to see whether the bear action is there. Now we move over to the stocks. Tesla to start with. Huge move, of course, after hours. And it just so happens to come into around pretty much this area here. So it was up about 11%. Let's just mark that out so you guys can see how much that is. It's only to about here, which just so happens to be support, therefore a resistance level. A few other things that I would do on the chart in terms of seeing whether Tesla is a real trade or not would be to also mark out a couple of key levels, maybe the 61.8 fib. I would also mark out something like an anchored VWAP on it. And I do think you'll find that Tesla is trading right around that res, being the daily 20 moving average as well, sitting at the same point. Now, if it does sell off a little bit and then retake the new high, I would say there's more chance that this is real, because we already know there are two massive transactions here. And as you take past those, you kind of start to see a basing pattern. Now, you might say, well, the earnings are so bad, how's that possible? I would suggest go and have a look at Meta on the chart, as that will tell you what happened last time this occurred, when you had a really bad result on the surface. And often a change in company comes with sackings. So Meta is a classic of that. They fired heaps of people, had a bad result. The market was oversold. It turned at that point. Do not fall for the trap of being into not being flexible because you go, oh, it doesn't make sense. The price action already has taken 40% off Tesla this year. So I actually think it may be a catalyst towards the bull end, and this could be something a little bit bigger, but we will need to continue to watch that stock and pay a lot of attention. Let's move over to Apple. Closed below, rallied a little bit, still underneath. So, of course, it's still in the bear action for now. And semiconductors, while they've been strong off the 20, not really strong yet. Kind of lagging a little bit here when you think about it. Semiconductors versus SPY, no real significant outperformance from the semis compared to the SPY. SMCI, something similar. Yeah, it's okay, but it's not fantastic. So if you go over here, the last day was a much better trade. It kind of suggests that if you're a buyer around this level here, stop losses below here, that would be a trade in itself because of the capitulation. So it's okay. There are some risks there. It's kind of like one of those ones that's a little bit better than a coin flip, but you can get like 2 or 3 to 1 style trades out of it. Nvidia, meanwhile, has been moving much more aggressively to get back to that support becomes resistance area. I've marked out one of my key zones, which is 848, from the potential of bears regaining control on Nvidia. But for now, it's wiping off everything it lost on the Friday trade. Another one that we've been looking at, bit left field, Lulu, another good day for it, 0.8%, actually behind the market, but still a series of nice green sessions coming off that capitulation low. Oz 200, the ASX is doing very nicely and holding above the weekly 20. Again, where's it find itself? Critical level. You're going to see this a lot on charts at the moment. Critical level ahead of Meta on the daily 20 moving average. Now, one market that doesn't care and is doing very well has to be this one. The Chinese market is absolutely going well. It looks like it's going to break out and start getting some momentum into it. We've been looking for this for a long time on the channel, and it doesn't matter what the news says. The price action and most of the undercurrents seem to be improving. So regardless of the fear that's in these markets, and you do need to put yourself in the mindset of someone that's held Chinese stocks for a long time. Some of these stocks are down 80, 90%. It's a brutal sell-off. So to start seeing a base that comes with an inverse head and shoulders, that comes with a very nice kind of well thought out accumulation zone, it comes with volume and all these other things, this is starting to look really, really nice. And I'm wondering whether we get some good momentum on it if we break through 17,300. So definitely an improvement in the HSI. What about the DAX? Well, it's pretty wild, really. I mean, the DAX has gone from being down here to here, a 5% move in just a few sessions. So DAX does look pretty good on the charts. Looks like kind of like pullbacks to be met by bull demand. I mean, take a look at it on the weekly. It's already just above that long leg doji. So it's kind of saying that maybe this is the last of the sell-off that you're going to get in what has been a very strong market. NASDAQ moving towards, I think, a very key point ahead of Meta's earnings. You'll notice here, 17,728. What began the sell-off now becomes resistance, which also sits with the daily 20 moving average. So it's a key zone, something that we must be watching. And of course, the res is there on the NASDAQ. And when we look at Bitcoin, it's also waiting, sitting right on the res. It keeps popping off alerts just above for me, but then rejecting those alerts. So you'll notice here, we're back in that supply. We're reacting off that supply. So this is the supply. This is a reaction. These are all reactions off that. And if the bears are going to take control, they have to do it here. If the bulls are going to take control, this accumulation busts up, and then maybe there's a new all-time high for Bitcoin coming. So very important zone for it. News overall, not too many things. We've got over here the core PCE this Friday, which is the most important. And as always, it comes down to earnings. So make sure to subscribe if you enjoyed today's content. Thank you so much for watching. And of course, hit the bell, as then you'll get alerts and make sure that you can watch the latest news in terms of macro and everything to do with the charts and the hottest levels. Thanks so much. Catch you for now. Good luck tomorrow.